YouTube, we are back. The squeaky chair going on. Excuse that. We are back, and it has been an absolutely insane week for GameStop in particular. If you're watching this video, I'm sure you've been following to some extent what's been going on with GameStop, whether you're just somebody who trades stocks now and then, and you're seeing it through Twitter, and you're looking at your Robinhood account, and you're like, what the hell is going on? Or if you have absolutely no idea what's going on, watch this video. I'm going to break it down. So grab a beer, grab a little, whatever you're into, and kick back, because we're about to jump down a rabbit hole. This is one of the crazy, I've only been in the market for a few years now, since I left college. So I've been seriously following the markets for probably about 5 years, but I've never seen anything this crazy to this extent as far as market manipulation goes, and just how blatant Robinhood and Citadel and we're going to get into it. There's a lot of information to process. First of all, you need to understand before you watch this video what a call and a put option exactly is. So if that's something that you're not familiar with, I'm going to explain it in this video right after this. If you're already familiar with calls and puts and what a short squeeze is, then skip ahead to that, and I'll explain the rest. And I'll put the timestamp up here so you can kind of scrub through and find where we're going over that. But nonetheless, calls and puts. All right, guys. So with option trading, we have two types of options. We have calls. We have puts. Calls, you're betting on the price to go up. Puts, you're betting on the price to go down. If you own calls, if you're buying call options, you are what is called a bull. I'm sure you've heard the term bull market. This means a market where stocks are just increasing at a crazy level. You're making great returns, right? If you own put options, you're betting on the market to go down. You are what's called a bear. So we have bullish and bearish calls and puts. Now, what a call option does is it gives you the right, but not the obligation, to purchase a stock at a predetermined price, also called a strike price. A put is basically covering borrowed shares. So I'm going to go into call options first. This is mainly what GameStop backers on Reddit are doing. These Wall Street bets guys, they are buying call options, and they are buying the actual stock itself, meaning the underlying asset of the company. So let's say you buy a call option on GameStop. You buy a call option on GME on January 1st. And it has a strike price of $25. And remember, you are betting on the stock to go up. Its current price is $23. So you have to purchase these call options. These call options themselves are contracts, and they come in, there are 100 shares in a contract, right? So you're basically buying one contract, which is 100 shares. And these contracts cost $1 each. Now, excuse my writing here. I know it's a fucking mess, but so now you're in the hole for $100, right? Not in the hole, but you've spent $100 so far on these call options. And we'll say they expire on March 3rd, right? So that's the expiration date right there. Current day is 1/1. So we've got 2 months for the price of this stock to increase above the strike price plus the price of the call options, which was $1 a share. So our break-even price, meaning the price where we will break even, we won't lose money, we won't gain money, is the cost of the contract, which is $1 a share, plus the strike price of $25 a share. $26 is our break-even price. Anything above that, we make money. Anything below that, we lose money. Now, Your calls give you, again, the right but not the obligation to purchase a stock at a certain price. Let's say, so your strike price is 25. If on 3/1 the strike price, the price of the stock is $24, you do not want to buy that. You can't buy it because you have the option to buy it at $25. You don't want to pay a premium on the stock, so your calls expire worthless and you would lose this $100, right? But let's say 3/1 rolls around and the price of the stock is now $30, right? Well, guess what? On January 1st, you bought the right but not the obligation to buy the stock at $25 a share. So what is now $30, you can purchase at a discount of $25. So let's do the math up here. Hopefully you guys can see that. You spent $100 on the stock, and now you're purchasing the stock on 3/1 for the price of $25 a share, and you have 100 of them. So you're buying 100 shares at $25. You're spending another $2,500, so you've spent $2,600, and the price of the stock is worth $3,000. So let's take this $3,000. I'm really sorry about the mess that I'm making with this handwriting. I'm all over the place. You have this $3,000, right here, and you are subtracting the money you spent, $2,600, and you just made a profit of $400. Not too bad, right? So that's how call options work. This is how people using GameStop have made immense amounts of money. There's that guy, Deep Fucking Value. He made, last time I checked, I think today he's up to $47 million, which is just absolutely absurd. All right, guys, let's go to puts. You are betting with a put option on the stock price to go down. Now, what a put does is it gives you the obligation. If you are not in the money with a put, you are obliged to cover your position and purchase those shares. So when you purchase a put, whatever brokerage you're using is going to borrow these shares. So what we talk about, right? We heard GameStop is 140% shorted. What that means is that if there's 100,000 shares of GameStop, there are 140,000 shares out there that have been shorted. So there are more shares sold short than there are shares in existence, basically. So the brokerage is going to borrow these shares for you. Let's say it is January 1st, and you are going to borrow these shares. The brokerage is borrowing the shares for you. You're going to buy 3/1 contracts. So these are contracts that expire on March 1st. That's 2 months from now. These contracts cost $1 a piece, and they are 3/1 put options on GameStop. And we'll say the current price of GameStop is $23, just like the last example. The strike price is $18, because you really think GameStop's going to fall. So basically what this is doing is it's giving you the right. If you are in the money, you now have the right to sell these shares at $18 no matter how low they go. Well, let's say that GameStop is not doing as well as it actually is in real life. They fall down all the way to $10 a share on 3/1. Well, guess what? You cover your position right before 3/1, right? And you say, well, I'm going to cover my position. Okay? GameStop's at $10. I'm going to exercise my right. So $1 a share, one contract. You've spent $100 so far. Just keep that in mind. So over here we'll do $100. Now it's at $10. Okay? So what this means is now you can buy 100 shares of GameStop for its current price, $1,000. Those borrowed shares now go to you. You're in the hole for $1,100 total. But you can still sell GameStop at $18 a share which is $1,800, you made $700. That is how a put option works, my friends. All right, now that we are all stockbrokers and we know what calls and puts are, let's go about with let's dive into what happened with GME. So, ticker GME, GameStop. If you are like me, you grew up in the early 2000s, you know all about GameStop. You were there, they offered you $5 for your PS3, PS4, whatever it was, and all the games, all the controllers, for absolute pennies on the dollar. It was robbery. And it was tough not to hate GameStop back in the day, honestly. I mean, especially if you go in there and you're like 10 years old, you get your PS2 and all the controllers, you want to get the PS3, and then they're like, yeah, we can give you $2 and some like $10 of store credit. You're like, well, fuck me, I guess I'm not selling it. Anyway, beyond the point. For those of you not familiar with GameStop, that's what it is. They are a retail store, brick and mortar store that resells and sells new and used gaming consoles and games, video games, excuse me. So anyway, how did this whole GameStop thing start? Well, basically GameStop has been failing. They have not, as many games, I actually recently bought an Xbox One, and I'm very late on that train. But the first thing I was shocked about when I bought it was that all of the games are now virtual. You buy them through the Microsoft Store, and PS4, I believe, works the same way. Very few, I don't even think my console has a disk drive anymore. So you cannot actually buy these the hardware. Like, you go on the cloud and you purchase the game, and that's that. There are still some games that you can buy in store at GameStop, Walmart, Target, etc. But I mean, if you're like me, I'm not running out to the store to get that. If I can download it from the comfort of my home, I'm doing it. I'll just put it on my card, whatever. So that's the issue with GameStop. They are not the best performing company as of late. So anyway, how did this whole thing start? All right, so GameStop bottomed out, I believe, around $4 a share. Nobody wanted it. They were facing bankruptcy, almost certainly, I'm pretty sure. But what one guy did is, his name is Deep Fucking Value, and that is his Reddit username. If you have Reddit, just type in the search bar u/deep fucking, excuse my French, value, without the excuse my French. Look that up. You'll see all his posts. You can dive in, and you can scroll all the way back to, I believe, over a year ago. I will post a screenshot right here. And you'll be able to see his initial position with GameStop calls and GameStop shares. So he bought these when the stock was pretty cheap. I would have to calculate his average cost, but it might be in that screenshot. If not, I'll do a calculation right here and show you what his average cost was. Anyway, he, for some reason, thought that GameStop was going to the moon. And a lot of people, when I say going to the moon, for all you Wall Street Bets rookies, it is a thread on Reddit where people post their insane bets on a stock, call options, put options, and they make a lot of money sometimes. But I've also seen people lose their life savings. So anyway, he posted this in Wall Street Bets, and he goes, I love GameStop. I think it's going to blow up. And he made a good amount of money. I mean, I believe he started with somewhere around 50K. So give it another couple months, and I think the pump really started. I can check right here when the pump actually started. And I hate to call it a pump because that's really what it was. It was the members of Wall Street Bets, myself included, buying the stock, creating a higher demand for it, and thus increasing the price. So yeah, back in June it was $4. Stayed at $4 pretty much all the way through August, and then started climbing in October. We're at $11 in November, back down, and then we go from $20 on January 11th, so 17 days ago. In 17 days, it went from $19.94 to an all-time high, intraday high, I should say, of $468.49 on January 28th. That was earlier today at 9:50 a.m. It was $468.49. So I don't know what the percent return is on that. But anyway, everyone in this Wall Street Bets Reddit thread was just blowing the stock up, saying, buy GameStop, buy GameStop. And the issue is that there was a extremely over-leveraged short interest in the stock. So what a short interest is basically is, I believe I explained this in the calls and puts video, but just to briefly touch on it again. When a stock is shorted, let's say it is 50% short interest, it means that half of the shares outstanding in the stock are shorted. They are borrowed by brokerages and being shorted by people. Now, they did some research. 140% of this stock was shorted sold short, as of 3 days ago. So January 25th, 140% of the GameStop shares were sold short, which is an astounding number. I don't think anything since Volkswagen in the mid 2000s has been shorted that high, to that high of a level, Anyway, what happens now is something called a short squeeze. So all of these Reddit day traders, Wall Street bets people, they realized if we buy up the stock, if we drive the price up, we buy call options, we can force a short squeeze, which it happens sometimes, but I've never seen a short squeeze to this level. Essentially what happens is, like we explained with calls and puts, right? If you have puts, you are obligated to cover your position if your puts do not finish in the money. So let's say you bet on the stock to go down to $20, it's at $400. You have to cover that position on the expiration date. You are obligated to. And this is why you read about people losing all of their money in Robinhood sometimes, because they don't understand how it works. And then their puts expire worthless and they're forced to cover their position. So these hedge funds, Melvin Capital Management in particular, I believe, I don't know the exact number of puts that they bought, but they were betting very heavily against GameStop to the point where earlier this week, their entire hedge fund, their entire portfolio had lost 33% of its value year to date. So in 25, 26, 27 days, a third of their portfolio was just completely wiped out. Now, why is that important? It's important because when you are shorting a stock, you're betting on it to go down, and the bulls, the people buying call options, are betting on it to go up. Now, Melvin Capital, which is the hedge fund that shorted GameStop heavily, very heavily, is forced to cover their positions when their puts do not finish in the money. Now, imagine they placed these puts probably when the stock was in the $4 to $20 range. I'm guessing it was in the $20 range. So they were expecting it to go down. If it doesn't finish in the money, all right, you got to pay, what, $20 a share for it. Well, imagine your Melvin Capital, GameStop is now at $350, and you have to buy that same amount of shares that you thought might be $20. So that's the issue. This is what creates a short squeeze. Now, with a short squeeze, you have two parties. You have the one party, the bears, the people betting on the stock to go down. They own put options. You have the other people, the bulls, the people betting on the stock to go up. They own call options. What happens is the bulls, in a short squeeze, the bulls are driving the price of the stock up. And as this price is going up, the value of Melvin Capital's and everybody's puts is going down. So when this happens, Melvin Capital is the bears, are in a panic situation. They say, do we lose all of our money, or do we just close out our position and then just take the losses, cut our losses and everything? What happens with a short squeeze is now the bears are forced to cover their position and buy more shares. And guess what buying more shares does? It drives the price of the stock up further. So now the bulls have completely taken over. This is why people are calling it a war. So not only did they drive the price up, but now they're knocking the bears completely out of contention. The bears have to sell all of their entire position cover their entire position, buy shares of GameStop, which drives the price up further. And this is why people talk about timing the market in a short squeeze, because you need to know when the squeeze happens. When a majority of the bears close their position, it's going to drive the price up and up and up and up. And then it's up to the bulls to decide, when do I want to get out? When do I want to take my profits? Do I want to ride this thing out? Because once the squeeze is over, guess what happens? Back down. So that is just a quick, simple, easy way of explaining a short squeeze. If you're a bull, you got to make sure you're, in this case, check your app every minute. If you can, find numbers on what percent, you need a current number of what percent of shares are sold short. It's very, very hard to find. I have not seen a ton of numbers floating around. As of today, I think GameStop is still sold 123% short, which is a very, very high number. All right, so now we're going to talk about the collusion, the people exploding on Twitter. You have Dave Portnoy coming out, freaking out. You have AOC, the congresswoman, coming out, freaking out on people. What the hell is going on, Robinhood? Why are you not selling? Why are you not allowing people to buy shares on Robinhood? Why are people's positions getting closed out without their knowledge? What? And it was not only Robinhood. I believe Webull did it for a quick minute. There were a few other. I believe TD Ameritrade paused trading on certain securities at one point. Ted Cruz even when and I read a tweet earlier, when Ted Cruz and AOC agree, you know something is wrong. They could not be they're two entirely different ends of the political spectrum. But I have seen very few. I don't think I've seen a single person try and defend Robinhood other than their CEO, who looked like an absolute asshole on CNBC tonight. Excuse my chair again. Trying to defend his decision to pause the purchasing of shares in Gamestop. And I believe there were, in total, it was 13 securities. I'll get a list for you. Hopefully I'll point a little screenshot right there so you can read. So the reason they did this, and here's my theory, right? And this is the general consensus. So you have Citadel, which is a credit union. They fill 60% approximately. These numbers came from Twitter. I don't know how accurate they are, but I was able to dig up an article back from 2019 that proves Citadel does at least provide some of Robinhood's orders. So when you buy a stock on Robinhood, Robinhood does not actually have this war chest of stocks and that they're moving around and everything. They're really using other brokerages to fill these orders and then giving the stock to you through that. I don't know the entire process. Google it if you want to know more about that. But anyway, here's an article from April 18th, 2019. Robinhood has faced criticism over the piece of its revenue model, which relies on selling customers' orders to high-frequency traders like Citadel Securities. That's all you need to know. So Citadel and Robinhood have a relationship, right? And we spoke earlier about Melvin Capital, which is a hedge fund. I forget the name of the guy who runs it, but he's a douchebag. And Citadel, when Melvin Capital had all these issues, right? They lost, like we talked about, they lost 33% of their portfolio year to date in 2021. Melvin Capital went to them knowing that they fill all the orders in Robinhood. They knew full well. They went to Melvin Capital and they infused $2.75 billion of capital into Melvin Capital to try and keep them afloat, to help them cover their position, to help. And, you know, obviously they trust them a good amount if they're, you know, they think they can pay them back $2.7 billion. I'm sure if you are a normal person, you can see the conflict of interest there. If you are Citadel, there is no reason whatsoever that you should be providing any assistance of any kind to a hedge fund that has taken a short position in a stock that is sold on a brokerage that you have a very strong relationship with. Hopefully you followed what I just said there. But basically, if you are Citadel, you cannot have a relationship with Robinhood and Melvin Capital simultaneously. It is the definition of a conflict of interest. Especially with GameStop. Listen, if Melvin Capital had not taken a gigantic short position on GameStop, this probably would have been fine. Nobody would be bitching about it. Nobody would care about it. But the sheer fact that this has completely taken over the internet for the last 3 days, and then in front of everybody's fucking faces, Citadel comes out and says, yep, we're lending money to Melvin Capital. It was all over the place. There were articles I've never heard of Melvin Capital until a couple days ago. And then today, you're not able to to purchase GameStop on Robinhood along with 12 other securities. So I'm sure you guys can see the issue there. From Citadel's standpoint, I really don't know how you can let that fly. Once the stock stopped trading, everyone started doing their research and they said, hey, you know what? Citadel fills an obscene amount of Robinhood's orders. And it's not old, it is old news. I mean, like I said, I brought up this article from April 18th, 2019, stating that Citadel fills orders on Robinhood. So that right there shows you that this was not some spur-of-the-moment thing. It's not a conspiracy theory. The Robinhood guy didn't even fucking deny it on CNBC. He shouldn't, obviously, because he's kind of caught with his pants down here. But I want to touch on that too. If anybody watches CNBC, it's the NBC's market channel. They basically cover the stock market, securities, stuff like that. And this guy went on there tonight and made himself look like an absolute asshole. He was fumbling over his words. He looked insanely guilty, basically saying that, oh, it was not Citadel's decision. We were not influenced whatsoever. It was a liquidity issue. It's a fucking liquidity issue. Then why didn't you have Citadel loan you some money? They've clearly got it. They just infused $3 billion into the hedge fund that shorted the security that you just halted trading on your platform. I digress. Like I said at the beginning of this video, I will disclose that I own a very small amount of GameStop. I am still in the green on it. So I'm trying not to get too pissed off about this. So basically what these hedge funds did, well, not the hedge funds, Citadel did, was it, and again, Robinhood has vehemently denied this, but the consensus amongst most people, AOC, Ted Cruz, Dave Portnoy, etc., and Twitter in general, is that Citadel now has not a controlling interest, but a very large interest in Melvin Capital. If they do well, Citadel does well. If they do not do well, Citadel is likely to lose that $2.7 billion investment in Melvin Capital. Now, like we said, Citadel fills a ton of Robinhood's orders. The consensus is that Citadel went to Robinhood and they said, listen, you need to shut down trading of GameStop and these other stocks that Melvin has shorted, because if you do not, Melvin will go down. And if Melvin goes down, that's not good for us. You need to close. And keep in mind, Robinhood has an impending IPO, which is initial public offering. They are trying to become a stock traded on markets themselves. So with an IPO, everything needs to be squeaky clean. You need to make sure that there are no crazy lawsuits, make sure that, from a legal standpoint, everything is in order. You can't have scandals. You have to have your books in order. You got to make sure that, this is a company that people want to buy. And again, the board members of Robinhood, it behooves them to keep everything nice and squeaky clean, because you're hoping when this stock goes public, people are going to want to buy it. And the higher the share price goes, the richer and richer the e-board gets. E-board meaning executive board. So that guy, I can't remember the name of the Robinhood douchebag CEO, but the higher the stock price goes up, the richer he gets. So in my opinion, shutting down trading today is a terrible decision on the side of Robinhood. I know that we've seen this stuff in the past where the big guy tries to take advantage of the little guy. If you remember with Apple, I believe the government was trying to put probes on certain people through Apple's products. They were trying to spy on them. They were trying to get information from them. And Tim Cook came out and said, fuck you, we're not giving you any info. It's a violation of your... I don't remember what amendment it is, but you're basically invading privacy, and Apple got a ton of great feedback for that. It is an incredible PR, but obviously we're not dealing with the government here. We're dealing with Citadel. So if Apple can stand up to the fucking United States government and say, we're not abiding by your rules, I 1000% guarantee you that Robinhood could have done the same thing and told Citadel, fuck you, we're not doing it because we care about our customers. So as I said, I am not a financial advisor. Anything I'd say in this video is not financial advice. You should consult a financial professional when making financial decisions. That being said, personally, I am pulling my entire portfolio out of Robinhood. I'm going to roll it into Fidelity. I cannot stand just the BS that has gone on today. And it really hasn't affected me that much, but just the fact that Robinhood very blatantly abused their power and their relationship with Citadel to manipulate the market is ridiculous. There are lawsuits regarding it, and I want to give you guys a quick example of a good reason why you should halt trading. Now, I want to give you guys a quick example of another security that you can no longer buy on Robinhood that I actually discovered about a year ago. I took a look at the financials. I thought it was a great company. I'll tell you the ticker. It was STM. It's a company called ST Microelectronics, and they are a chip company. They're a chip maker. I believe they're a French-Italian company. It doesn't matter. But anyway, they are a foreign stock. So They are what is called a New York registry share. So they can trade and settle in the U.S. in U.S. dollars without the need for issuance of DRs. So basically what this means is that it is a foreign traded stock. Whatever brokerage you're buying it on will translate the price in US dollars, and you can trade it in the US. Now, STM, I noticed a couple months ago, I don't know when exactly this happened. I'm looking at the Robinhood thing here. Starting January 11th, this stock was removed from Robinhood. If you had a position in it, you still have it. I have not sold my position. I have not closed my position yet. I haven't sold my shares. I'm up 52% on them, and I was planning on buying more. I've bought more every couple months. But it was removed because it was a foreign stock. And you know what? I brushed it off. I'm like, it's no big deal. I don't know if they're still currently trading on other platforms, but, I brushed it aside. So that is a perfect... I haven't seen people on Twitter up in arms over the fact that you can no longer trade STM on Robinhood. And I believe it has a market cap about 3 times the size of GameStop's current market cap. So this is a much larger company that is no longer able to be traded on Robinhood. However, there was no outrage about it. So that just goes, it further proves the narrative that this is a GameStop thing. This is clear market manipulation. I don't think that Robinhood removed STM to manipulate the market earlier, but the fact that they're doing it to GameStop is just absolutely absurd. All right, guys, so I want to touch on a little bit of the Wall Street bets lingo. Now, if you are a normal person and you open up Reddit, so hopefully most of you are familiar with Reddit, the website. I personally use the app. Reddit itself is just a rabbit hole. You can spend hours on there. They have a page, a subreddit, it's called, for absolutely everything. Anything you want. Look, if you're into real estate, they have real estate. If you're into anime, they have anime. If you're into comic books, there's a comic books thread. All these pages where you can find people with the same interests as you. They're posting stuff all the time, and usually the moderators, people who run these pages, are great. So if somebody comes in and they want to spam your page, it's usually out immediately. Wall Street Bets in particular, they have some phenomenal mods. I will try and tag their usernames on Reddit over here so you guys can see. They have been great through this entire GameStop process. Deleting, just shit posts is what you call it on Reddit. So people just spamming the page. But anyway, Wall Street Bets. There's a lot of emojis. I've been on Wall Street Bets now for about a year and a half. And if you go on now, you're going to just see a ton of rocket emojis. All a rocket means is we're going to the moon. We're leaving Earth. We're strapping in with GME. We're strapping in with AMC. A couple months ago, it was Planeteer. And we are heading Tesla straight to the fucking moon. That's what the rocket emoji means. Now, diamond hands. It is the diamond emoji and then the hands emoji. I don't know if I can get emojis in this video, but if I can, they'll be right here. Diamond hands means that you have diamond hands. When the stock price drops, you do not waver at all. You hold, you hodl. Hodl is also means hold. You're holding onto the stock with diamond hands, and if you have paper hands, you panic sell. GameStop's at 300, 5 minutes later, it's at 150. You have paper hands, you sell. If you have diamond hands, you ride it through the 150, you ride it through 130, you ride it through 120, all the way back up to 150, and the people with paper hands are over there saying, what the fuck did I just do? Why did I sell? I'm stupid. They buy back in, stock drops back down, and now they're at a loss. So that is what diamond hands means. That is what the rocket ship means. I'm trying to think, okay, listen, full disclosure, I have to say this because I don't know who's watching these videos, and I truly do mean it. I'm not homophobic in any way. I love, if you're gay, straight, black, white, whatever, I love you. I don't have anything against you. But one of the terms used on the Wall Street Bets thread is a gay bear, because in Wall Street Bets, we do not like bears. So it is 2 emojis. It's the rainbow emoji for LGBT, and then it is the bear emoji, and it means gay bear. This is referring to people who are shorting the stock. They are bears, and they want it to go down. And again, we do not like bears in Wall Street Bets. All right, guys, I know this is only my second video, but sincerely from the bottom of my heart, I know it's mostly probably friends and family watching this, but I sincerely appreciate your support. If you could like, comment, subscribe, anything helps. Follow my Twitter handle. It's at my first and last name 1. So it's at JAREDCUTTS1. I'm continuously posting about the markets, what's going on with GameStop more recently. And more importantly, incredible memes, dark humor, stuff like that. My Twitter page is fire. Give me a follow. But I really, really do appreciate all of the support that I've gotten from the bottom of my heart. Additionally, if you have any recommendations, requests on videos that you want to see, comment down below. If you know me personally, shoot me a text. But if you're not subscribed, I'm not doing it. So please subscribe. No, I'm kidding. But in all seriousness, appreciate all the support. Thanks, guys.